So, as a 1099 employee, someone who is an independent contractor for DoorDash or Uber or what have you, taxes are not being automatically deducted from your pay. So, do you still have to pay taxes? Absolutely yes, 100%. If not, you could actually go to prison like our boy DMX and Todd Chrisley.
X gon' give it to you.
So you have to pay taxes. There's no way around that. But it's not as menacing and terrible as it sounds. There are ways you can start preparing, ways you can save with deductions and credits, and I'm going to cover just about all of that in this video coming up, so stay tuned. Alright, Hey, Steve here, guys. So if this is your first time finding my channel, if you are in search looking for something and you see me and you decide to click that ugly ass thumbnail, hey, I appreciate you. My name is Steve. I'm 27. I'm a full-time accountant. I do tax work, starting to branch out into some freelance type accounting and consulting. And this is my YouTube channel where I talk about taxes, finance, side gigs, college, student loans. If there's a topic I think is just awesome that day, I make a video on it. So this is my channel. I appreciate you coming here to watch this video, and you can go ahead and smash that subscribe button. I have a lot more coming, and when you do, I am 100% accessible. So go ahead, add me on Facebook. I'm getting pretty close to being full on there. Add me on Instagram. If you have a question about your taxes, finance, investments, side gigs. DoorDash is my strong suit with side gigs on the gig economy so far. Feel free, shoot me a message anytime, man. I have a lot of downtime during my day in the office, so shoot me a message. I'll get back to you, and we'll get it figured out, trust me. So far, all of you that are doing that, I love that. So far, I've been able to help out some people with some cool things, but if you have a question you need some help on, I will be more than glad to help you out with that. But that's enough about me and this channel. Let's get into the topic. Mainly with DoorDash, but any 1099 gig where you are not receiving a W-2 for your pay, but a 1099M, that stands for 1099 miscellaneous. How can you start getting ready for tax time, especially if this is your first time? And you know, there's so much misinformation on the internet, especially in these damn Facebook groups, from people who are, one, they're not accountants, two, they're not even tax preparers, and then three, they're throwing around bad information, myths left and right. Everybody has a trick that they're not going to have to pay any taxes, okay? Let's just throw all that crap out the window right there. You need to be getting your information on taxes from a serious, legitimate source. So if you have an accountant that you deal with now or a tax preparer that you trust, you definitely want to be hitting them up and gathering information as you go about taxes, especially if you're a 1099 employee full-time. You know, if 100% of your income is coming untaxed to you, you know, when you start getting into big dollar amounts, you can seriously get into some trouble. Come tax time, April 15th, you know, a $20,000 tax bill is not just going to go away. So it is super, super important. Stay on top of your taxes. As a 1099 independent contractor, you are technically self-employed. So take advantage of those words, those power words, self-employed. That's what everybody wants, okay? It's now time. You have to start picking up some tax prep and some bookkeeping skills of your own. That is so important, and it's so oftentimes just disregarded by people out here doing these 1099 gigs, okay? And there are going to be a lot of people, especially now, 2019. It started in 2017 or so, and then it's getting bigger, and now 2019, there's a huge percentage of people out here as we start moving into more of a gig type economy, okay? So first off, if we are looking at DoorDash or whoever your employer is right off the bat, by law, by January 31st of every single year, they must mail you or transmit electronically to you what is called a 1099M, okay? This 1099M form that we have on screen here, this is what you're going to get. There's not much to it. There's only a couple boxes that matter. Okay, guys, so as we look at this 1099 here that you will receive from from DoorDash. Up in the top corner, you have the payer's name, which will be DoorDash. That's them, their address. Below is their federal identification number, and then right beside it is the recipient's identification number. Now this number looks familiar because if you do not have an EIN, which is a employer identification number, this should just be your social security number, followed by your name, your address, city, town, yada yada yada. Okay, and then scroll over here to box number 7. This is your non-employee compensation. This is the money that you earned doing DoorDash. So that number, the number we're looking for, the one that matters, is right here. That number 7 box, okay? That is the amount of money you earn from your gig. Okay, right off the bat, huge myth on self-employed tax, especially with these gigs that I'm seeing in these groups are, yes, quarterly estimated tax payments are a real thing. And they are, an estimated tax comes into play when there is an expectation that you will owe the IRS more than $1,000 by the end of the tax year. So if you've earned $10,000 so far on 1099s and you haven't paid a penny of taxes, odds are after all of your deductions you are still going to owe over $1,000. Okay, if you haven't made any quarterly payments to the IRS on this in that time, this is where the myth starts. Number 1 says you need to be making these quarterly payments. You should. You do not have to. You aren't going to be thrown in prison, hunted down if you haven't made your quarterly estimated tax payments. But if you fail to, and you do owe the IRS more than $1,000 at the end of the year, which is very easy to do, especially if this is your primary source of income, you could pay an underpayment fee of 6%. Also, this 6% may sound like a small number, but the power in paying these estimated quarterly payments every 3 months is that you are forced to put aside money. And this is a big problem with people their first year or 2 if they haven't learned their lesson in working these type of jobs. You know, your tax liability is obviously going to get larger and larger. And so many people just get blindsided and punched in the face into the following tax year when they go to file their taxes and find out, oh crap, I owe $8,000. Yeah, you know, if you would have broke that up, that would have been $2,000 4 times, and now you probably only have a couple months to come up with this, or your tax payment is late. And that's not the end of the world. You absolutely, rule number 1 with taxes, you have to file. There's no way around it. You have to file. You have to file state and federal. Federal is the huge one. Make sure you file and then deal with what comes after. Then second, if you owe, you need to come up with an arrangement on paying, and the IRS has a ton of ways that you can do this. Now, if you're blindsided this year, if you already wasted too much time, you made too much money, now you have a huge tax burden, and you're going to have to make a big payment at the same time, start saving some now, and start doing research on the IRS's late payment type of methods. There are some out there that we could get into in a different video, but right now you should really be thinking, what is my step as we're in quarter 4 of 2019. I need to figure out how much I owe, and I can start preparing for that accordingly if you haven't already done any quarterly payments. But one strong suit of these quarterly type payments are you're forced to start saving money for taxes right now, and that is huge. We'll get more into that. Then second, the only thing anybody cares about are the deductions. Now, with DoorDash, Uber, Lyft, all of these ride/delivery based gigs, most of your expenses are going to come from your vehicle. It's the nature of this business. So, with vehicle expenses, you have 2 options. Now, a lot of people get this confused. You have option 1, which is the standard mileage deduction, or 2, which is the actual expense deduction. And which one of these is right for you depends entirely on you. Now, I will say, generally, for most people, the standard mileage deduction is going to be much larger and much easier to calculate for you or for your tax preparer, but this is something to talk about with your accountant or with your tax preparer. If you go to an H&R Block or TurboTax and you use their CPA service. Now, number 1, the standard mileage deduction. Standard mileage, you can deduct mileage at a rate of 58 cents per mile. Now, how do you know how many miles you drove? And that's from the first day you start the first day you become a 1099 employee. If a vehicle is involved, you need to download yourself a mileage recording app. if you don't have a cell phone somehow, you need to get a notebook, put it in your car, write starting odometer, ending odometer, but do something and start calculating your mileage as soon as you start. If you didn't already, start now, and eventually, between these next 3 months, between now it's September 9th to the end of the year, you have 3 months where you can go collect a pretty decent bit of data and you can average it out for the previous time that you missed, okay? So, standard mileage, 58 cents a mile. Especially with DoorDash, this is going to add up quick, and this is going to really hit that huge tax burden that you've seen, that big number that's going to scare the hell out of you at first before you put in your deductions. The standard mileage is going to really hammer this out. And the other, on the flip side, the actual expense method. Now with this, it is all of the other expenses, and you would take the greater of the two. Now, since the tax reform bill of 2017, 18, since that bill passed, the standard deductions for vehicle mileage and your standard deduction just for filing in general, those numbers were really boosted up by a huge percentage. So now itemized deductions in any manner, they really aren't as strong as the standard in most cases. For the actual vehicle expenses, you can deduct the price of gas, oil changes, car washes, your car insurance. Now, we see this a lot. Can you deduct your car payment? And no, you can't. If it's a loan, you cannot do that. But if it's a lease, if you're leasing a vehicle, you can deduct that amount of that payment up to the percentage of use for business only. Okay, that sounds super confusing, but just bear with me for a second. If you have if you're some unlucky bastard out there that has a Toyota Prius, let's just say you bought a Prius for the only reason that you're driving it for work only. That'd be the only reason I could imagine to buy a Prius. But anyways, so you have your Prius, your lease payment is $200 per month, okay? And you can prove that you were using that vehicle for business 50% of the time. So you can deduct 50% of that $200 lease payment every month as a deduction. So $100 will come off, and that is a tax deduction right there. On the flip side, if you're buying and paying an auto loan, the percentage of your interest rate, of your interest payments, is also deductible. So if you have a 6% interest rate on your vehicle loan and you can prove that you use that vehicle for 50% business, you can take half of your total interest that you've paid and use that as a deduction. Okay. So any other vehicle incurred expenses for a business vehicle, they're all deductible under this method. Now, the one thing that matters the most also is you still have to log your mileage by doing the actual deduction method. So either way, you need to start logging miles. There's some great apps out there like Stride, Mileage IQ. There's a bunch of them. There are free ones. The free version of the paid apps will work just fine. You just need your mileage start to finish, okay? If not, if you want to do it manually, write it down, put it on a spreadsheet, do yourself a favor. If you're not doing this, start this right now. This isn't even just for DoorDash and driving apps. Anything that you can use your personal vehicle as a business tax deduction, take advantage of that. That's where big money is coming, especially with these type of gigs, okay? So definitely want to get that taken care of. Start tracking your mileage right now. Okay, and then other deductions. And the big one of these that comes to mind is your cell phone. Okay, and a lot of people want to try to take advantage of this. They want to ask, can I just deduct my entire cell phone expense? And unless you can prove with phone records that you are using your cell phone and everything associated with that for 100% business, then no, you can't. It's again, you have to find a percentage of business use and plan accordingly. So if your cell phone, you use that for 50% of the time for business, taking your DoorDash orders, your Lyft rides, all of your different gig apps, if you can prove 50% of your cell phone goes towards business only, you can deduct 50% of your cell phone related expenses. Now, on DoorDash at least, we are all using our phones for a certain percentage. We have to. It's the nature of the app. The app tells us where to go and what to do. So find out how much of your cell phone use you can tie and point towards your business expenses. Your accountant will be able to help you out with this. If not, just take a look over your phone bill. They're so detailed with all these pages of crap that we never look at. You can find out almost exactly how much of your cell phone use is going towards your business expenses. And then you can write off cell phone payment, your cell phone insurance, your actual cell phone that you bought if it was in that year, cell phone accessories, everything related, they're all deductible. And then for DoorDash, business related clothes, if you're buying DoorDash uniforms or if you are buying more hot bags, pizza bags, they're all 100% deductible. But how much are you going to pay and how much money should you be setting aside? Now, to understand that, you have to understand the taxes that you're going to be liable for that you have to be paying. And first, right off the top, unusual from any job you've had making a W-2 is the self-employment tax. Now, this tax is 15.3% in 2019, and of that, 12.4% comes for Social Security, and so I'm going to look at my cheat sheet here. The other 2.9% of that is from your Medicare tax. So, right off the top, 15.3% after your deductions, and I did a really good video on what tax deductions are up above. Give that a quick watch if the last section of this video confused you a little bit. I know it's weird, especially your first time around in this situation, but learn what a tax deduction means. That video is linked here. It's down in the description box too. So pause this, watch that. It's only a couple minutes long, and that should get you squared away on that. Okay, next, you will pay your federal taxes. Now, your federal tax is based on the tax brackets you hear about. Again, here's a video linked up above and down in the description box I did on explaining tax brackets. And this relates to where your entire income falls on this basic hierarchy of tax brackets. So, at the lowest end, you could be paying 12%, and at the bottom end, you're paying 36%. So, where you fall into these tax brackets with your entire income means how much money you'll be paying on that income. Okay? Check out that video if you haven't too. That was my very first video because I felt like it was the most necessary, and I can't stress that enough. Learn what tax brackets mean, see why you're paying what you're paying. It's your money. You figure out why it's going where, okay? Don't let taxes be a mystery, and don't let them screw you over, and start understanding all of this. So start with tax brackets and go from there for personal taxes. Okay, then next you'll pay your state and your local, which is a set percentage depending on where you live. This is going to be a small amount. Even if you made a big amount of money, it's going to be relatively small percentage-wise compared to your federal, that'll be your biggest, and then your self-employment taxes, which is the second largest. Then state will be third, and local will be the tiniest amount at the bottom. By going on this logic, if from all of your income sources combined, if your total income is less than $40,000, actually the real number is like $39,450 in 2019. If it's less than 40 grand, I want you to be putting away 25% of what you make. So if you make $400 in a week from DoorDash, put $100 in the bank. Okay? If you make $500, put $125 in the bank. Just start preparing now, start putting money aside, because these tax payments are not going to go away. Now, if you're thinking like the average person's like, well, if I have all these deductions and I only made 40 grand, why should I still be saving such a big percentage? It's because you should err on the side of caution at all times, okay? This is also a great lesson in personal money management. Now, there's going to be somebody on here that's like, I'm not just sitting a big portion of my money in a bank account waiting to pay taxes. I could be investing. And you're right, you could, but for the other 99.9999% of people that are going to be watching this video, let's err on the side of caution. Let's start building some decent money habits and learn how we could have money in a bank account for a reason. That's not just going to be spent until we get paid next week and then spend that too, okay? Let's just start with the basics. Set aside your money. We will talk about paying your quarterly tax payments, and everything will all kind of come together. And if you err on the side of caution, so one, when you are calculating and paying your quarterly payments for estimated tax, you aren't going to be using that whole 25% you set aside. There's going to be money left over. What a shame that would be if we had money that wasn't accounted for that we saved and we don't have to pay on our taxes, or maybe our deductions were bigger than we thought. So that money, you can either set it aside for the next quarterly tax payment, or you now have a savings account for the first time in your life. So either way, err on the side of caution. Set aside a little bit more. If you make less than $40,000, 25% will be fine. If you make more than $40,000, do me a favor, do you a favor, do your accountant a favor, do the IRS, don't worry about the IRS, they'll be fine. Set aside 35%, okay? That way you're safe, you're covered. If your deductions don't add up as high as you wanted to, if it's the difference between being safe or lying about deductions, getting yourself audited and getting into that nightmare situation, err on the side of caution, guys. You're probably going to come out with a little bit extra money saved, and there you go. You now have a savings account. So that covers how much you should set aside, the deductions you're going to be eligible for, who needs to be paying taxes, anyone who collects a 1099. You do not have to pay quarterly estimated tax, but if you choose not to, you will pay a 6% penalty, which could be a drop in the bucket or it could be more. Now also, DoorDash or any other employer does not have to send you a 1099 if you made less than $600. Now, if you made $599, that does not mean you are not liable for paying taxes on it. And what I mean by that is, the IRS requires you pay the self-employment tax, that 15.3%, on any self-employed income over $400. So if you're in a weird spot where you did DoorDash and you made $550, DoorDash is not going to send you a 1099. You're going to have to get creative using your app in figuring out the amount that you were paid out by yourself, and you're still going to have to pay taxes on that amount. Okay, and the last thing to talk about here is who should be doing your taxes. There are a bunch of different options. You don't have to go out and find a CPA that's going to charge you a ton of money for a pretty simple tax return. Even for a self-employed tax return, there's no reason to go out and spend hundreds of dollars for a CPA to do them if it's just straightforward. Take the time, learn how to do it yourself, use a software like TurboTax, where you can pay for the self-employed version. It's like $80 for federal and state. Do it yourself and you're going to save yourself a ton of money. And be careful with the tax prep services like H&R Block, those ones, because these tax prep people, they are not accountants. A lot of these places, they take a little course on a computer that might be like 12 hours long overall, and they're branded like they're CPAs out there, and that they are not. Another thing, not all accountants work with taxes, so you could be saving yourself some money just by learning how to do it yourself, and that's what I would recommend for everybody. And you know, worst case scenario, the first year, if this is something you plan on doing for a long time, go to a tax prep service or an accountant that you know of, that you trust, that's going to charge you a reasonable price, and when they do it, ask questions about different things so you can understand what went into it, so you can do it on your own going forward, because that's the best way, really. Do it yourself, you're going to save a ton of money, and as a small business operator, as an independent contractor, self-employed, what have you, you need to be picking up bookkeeping skills, and that starts with tracking your mileage, handling your deductions, estimating your quarterly payments. It's really, if you have a computer with Google Docs, which is free, you can do all of your own bookkeeping yourself. You know, you can do it with a notebook if you're more traditional. And then for tax prep, learn what goes into this for filing your taxes. TurboTax makes it so easy. And last year, if you paid the $80 for their self-employed package, you got QuickBooks Self-Employed for free. You know, and that would really make life easier right now. So that's something to think about. Learn how to do your own taxes. Save your money. You don't need some $300 CPA to sit down and do your taxes. The H&R Block and these kiosks at Walmart, these people, they're not accountants. They take a class and they do taxes. Some of them might be really good and you might be finding value there, but there's really no difference in somebody who took a little class and just taking the time to do it yourself. Okay? So do your own taxes. And that's really all for this one. We covered just about everything. If there are any questions at all, just leave a comment down below, or anything further, message me on Instagram, on Facebook. Both of those are Steve Hogue 16. So add me on those. Send me a question, anything tax related or DoorDash related, whatever. And thank you for watching. So hit the like button. If you haven't subscribed already, give that a press. This video is long. There's really no way to make taxes suck less than what they do. So you just pretty much have to lay it out in the most simple way possible and just go from there. So subscribe button, the share button, press all the buttons down below. Comment with any questions you have, positive feedback, say something nice, say something mean. And if you say something mean, subscribe so you can do it again next time. And thank you for watching.